All right, so bright and early, we got some news that Plains is buying the remaining interest that they hadn't already announced that they were buying of Epic Crude Oil Pipeline. So just a recap, I think it was about a month ago, they announced that they were buying the 55% interest in Epic Crude Oil Pipeline that Kinetic and Diamondback owned. So that was announced a few months ago. Just this morning, attached to their earnings, Plains announces that they're buying the other 45% from Ares. So I'll just do a rapid reaction video on this. I'll go over what Plains said, which is effective November 1st, they've completed the acquisition of the remaining 45% interest in Epic from portfolio company Ares private equity for 1.33 billion, inclusive of 500 million of debt. Additionally, Plains has agreed to a potential earnout payment of 157 million tied to expansions on the pipeline by 2028. So now Plains will own 100% equity in Epic Pipeline, Epic Crude Oil Pipeline. It appears they're going to remarket it and rename it Cactus 3. So let's just dive into some of. I just threw together some quick economics of what this could look like. They in their press release they say they could get a 10x multiple. They expect a 10x multiple on this by 2026. We'll see if that's possible. Seems reasonable to me. And then significantly improving over the next few years. That's probably alluding to a potential expansion project that Epic would be able to do. So let's dive right in and talk about this a little bit. Just to lay the land a little bit, this is Epic Pipeline. Just bring up the crude oil pipeline here. So here's the pipeline taking oil from the Permian as well as places in the Eagle Ford, the Gardendale area here, other areas of the Eagle Ford, and moving that to the Corpus Christi area. So if we look at recent flows on the pipeline, I've written a little bit about this. We've seen a fall off here. In July, they reported a fall off. We don't have any more recent flow data, but in July there was a fall off after being really above their nameplate capacity. I think they announced nameplate capacity is 600,000 barrels a day. I bumped it up to 625 as they were doing right around that amount. But they did have a step down in July. I don't know exactly why that is. I would guess that that they're marketing less on the pipeline. They could have been low margin marketing contracts that fell off here, or Epic themselves is marketing less on the pipeline just because of more competition, which we've talked about out of the Permian with the amount of, there is some space out of the Permian where it sounds like marketers are being more aggressive. So there is some space on this pipeline, although based on what the 2024 announcements where Kinetic and Diamondback did buy more of the pipeline and extended and re-upped or increased some of their commitments on the pipeline, I think that it's pretty well contracted, at least for the next 5 years. So I've done a video on that as well. So I think it's pretty well contracted for the next 5 years. There is room for an expansion. This is a 30-inch pipeline, so this could be expanded theoretically to 900,000, even up to 1 million barrels a day potentially. Gray Oak's a 30-inch pipeline. They're doing 1 million barrels on their pipeline, so theoretically that could be pumped up to that. So yeah, this is the lay of the land. So let's talk about the economics. Let's talk about the rest of the infrastructure that Plains is going to own now. So Plains is going to own Cactus 1. So I'll just toggle this on here. This is a pipeline from Midland. They have a lease here on one of their own systems. It's really from McCamey to Gardendale, but they do have a lease from Midland, so they can pull from Midland. And then coming into the Gardendale area as well. At that point, it attaches to the Eagle Ford JV. So this is an important piece to note that from Gardendale down to Corpus, the volumes attached to Cactus 1 are split between, they're on a JV pipeline between them and Enterprise. So there's the Eagle Ford JV pipeline. So the barrels, they're sharing some of the revenue or some of the profit on barrels coming down Cactus 1 via a joint tariff with Eagle Ford JV with Enterprise. So let's keep that in mind. And then they also have Cactus 2. So they also don't own all of this pipeline. This pipeline is co-owned between them and Enbridge. So I'll clear it so you guys can see its own thing here. And then we'll look at just flows on this quickly. This is pretty full. So this is a 26-inch pipeline. Capacity I have around 670. So this is running pretty full as well. So something to keep in mind here is they don't fully own all the capacity or all of the pipelines that currently go from the Permian to Corpus Christi. They only own parts. They own 70% of Cactus 2. They own all of Cactus 1, but the barrels that go from Gardendale to Corpus Christi, they only own 50% of the interest in that Eagle Ford JV pipeline. So again, Cactus 2 full. We'll just go through these again really quick. Cactus 1 mostly full. There's a little bit of space on it appears, last I checked. So yeah, a little bit of space on Cactus 1. And then Epic has a little bit of space as well, as they've stepped down in July here. So let's talk about the economics of this quick now that we've talked about the actual pipelines and the infrastructure that Plains is going to have now from Midland down to, or from the Permian down to Corpus. And I just threw this together really quick. Let's hide this for now. So estimated EBITDA, you can look at the FERC financials. I've been told, and it seems reasonable, but those are a little bit misleading. Those only show EBITDA for the pipeline itself. Doesn't show the low margin or lower margin. It doesn't take into account the lower margin barrels that they're getting, or the lower margin profit they're getting on the barrels that they're marketing on that pipeline. So it appears to me that, and based on financials released by Kinetic and others, that the EBITDA in the FERC filings overstates the actual EBITDA of the holdings because of lower margin marketing earnings that Epic is doing themselves. So the number I've taken is based on financials, quarterly financials and yearly financials that Kinetic has put out. Now they don't give an EBITDA number that I've seen, but they do give a step in revenue. So you can see the revenue of the pipeline. You can see the operating income of the pipeline. So you can reasonably back into a number based on that, and some notes from S&P when they were re-rating the debt in 2024 on the pipeline noted that based on the contracts on the pipeline, they expected EBITDA to be above $250 million in 2025. That looks reasonable to me based on the step up that Kinetic has had in their disclosed revenues of the pipeline. So I'm at around 255 for EBITDA of the pipeline. And based on, this is an 8/8 analysis. So based on the full acquisition price of the pipeline that Plains has paid, so it'd be right around 2.9 million, you get about an 11.4 times multiple. Again, my EBITDA number is estimated. Could it be a little bit higher? Could it be a little bit lower for 2025? Yes, this is an estimated yearly 2025 number, but it seems reasonable. Again, based on Kinetic's disclosures and S&P's credit disclosures. So let's talk about how they could get this multiple down. So Plains has talked about getting this to a 10 times multiple by 2026. Is that reasonable? Yeah, I think they could do it. Is it a slam dunk? I wouldn't say that either. Let's talk about ways they could do that. They could fill some more of this capacity here without expanding it. So I wouldn't expect an expansion next year, just based on the fact that they'd have to pay out some money to the old owners potentially, depending on the size of that expansion. Also, I don't think the market probably needs an expansion next year based on the open capacity between the Permian and areas of the Gulf Coast. But they could fill this with more marketing volumes. They absolutely could do that. Another idea to think about, and one that I've hinted at, let's talk about Cactus 2 here. So Cactus 2 is running relatively full. And remember, this is a JV. They don't get all the upside from the barrels coming down here. So to the extent that they are marketing, Plains is marketing their own barrels on this pipeline, and there's the opportunity to shift barrels from a 70% owned pipeline to Epic, which they own 100% of, that's something they definitely could do. Now, certain contracts are in place where they're not going to be able to do that, but certainly as contracts come up, or as Plains decides to market more barrels or has the ability to market more barrels, they would probably allocate those barrels to their 100% owned pipeline rather than Cactus 2 or Cactus 1. Remember, they do own all of Cactus 1, but they don't own the piece, the full piece going to Corpus Christi. They have to share that with Enterprise. So those are two ideas where you could shift some marketing barrels or some short-term marketing barrels over to Epic and get 100% of the upside. Another idea here is there's probably a fair amount of DRAs running through this 26-inch pipeline with a 670 capacity. They could probably back off this a little bit and save some money and shift those barrels over to Epic as well, given that Epic does have a little bit more space on it. So there's potentially some cost savings there. We'll bring up Epic again. We'll talk about how it fits in with their footprint a little bit. So I think everybody knows, but they have just an absolutely massive system in the Permian from a gathering standpoint. So let's bring up that quick. So if you just bring up Plains Oryx, you can see that massive footprint that sits right over this pipeline. So certainly some areas where if you can do a deal for gathering plus transportation, they might be able to market a little bit more effectively than Epic was doing on their own. The Ironwood acquisition that they just made, let's take a look at that. So they've highlighted this in the original 55% that they bought, that it ties in pretty well with their Ironwood system. So I'll just toggle those gathering pieces on here. So this is some gathering in the Eagle Ford here. They have a tiny little system up in the Permian there. They have this system here that ties in pretty well. This system they could potentially connect in, I guess. But you could get some extra fees from pump over fees from the gathering system to the pipeline and things like that. So those are two ideas for short-term ways they could knock this multiple down from my estimated 11.4 to the 10 times multiple. That's certainly something they could do. Let's say they added 20 million. That gets them pretty close to what the 10x multiple would be. Looking forward, they said improving on that multiple over time. So that would be via an expansion, I would guess. So I put 4 scenarios for an expansion here, just different rates that I guess that they could potentially get. So kind of at the bottom of that would be like a dollar rate. So that would be competitive with some of the cheapest pipelines in the Permian on a long-term contracted basis. And then something like $1.75, which would be a more bullish scenario where we start filling the Permian and we run out of space. I think that they could conceivably get $1.75 under that scenario. I don't think it would happen next year. We're talking 2027, 2028 most likely. I will say I am more bullish that they could get that type of number given some of the commentary from producers and midstream companies on 2026 guidance of production. I do think we will see some growth in the Permian. I don't think the Permian will fill all the oil pipelines next year, but it conceivably could happen in 27, 28, or 29, given the outlook. You will need prices to hold up, which may not happen if we're continuing to grow in every basin. So here are the scenarios and just what they could get down the multiple down to. I should actually change this here. This would be, let's assume 200 million on the expansion would be what the cost would be. So let's take that there. So you could get down to an 8x multiple under a really good case scenario. They could potentially pump the expansion more than 300,000 barrels a day. That 300,000 would take them to about 900,000 barrels a day of capacity. Again, it's a 30-inch pipeline. Enbridge is doing close to 1 million barrels a day on theirs. So this could potentially go up to 400,000 barrels a day of expansion capacity. I think 300 is a good number to use there. So layering in that expansion at these rates, you would get anywhere from an 8 to 9 times multiple. Again, this is relying on them being able to do that, which was relying on the Permian continuing to grow and fill up, let's call it 700,000, 600,000 barrels a day of excess capacity, 700, 800,000 barrels a day of excess capacity that sits between the Permian and the Gulf Coast on crude oil pipelines today. So overall thoughts, not a cheap acquisition. I don't know how the market's going to react to it. Certainly some areas, I don't think that their guidance is off base that they could get to a 10 times multiple by next year. Seems reasonable to me. Longer term multiple, if they were to achieve an 8x multiple, I'd call it a win. Over the next few years, if they were able to achieve this 8 times multiple via an expansion, I would call that a win of a transaction. If not, even if you're doing a 9 times multiple, it's a little pricey. So we'll see how it turns out. I am much more optimistic of an acquisition like this than I was 3 months ago, just given the fact that even at $60 oil, we still have producers saying they're going to, and midstream companies saying there's going to be growth in the Permian. I have no reason to not believe that based on the numbers that I'm seeing come out of Q3. So hopefully this was helpful. We'll keep it short. Hope everybody continues to have a good earnings the next couple weeks of earnings. Please reach out if you have any questions. If you want to test drive the platform that I showed earlier, let me know. Have a great day.